Hello, everybody. Just getting organized. We are live on Facebook, LinkedIn, YouTube, X, Instagram. I have my notes. Camera's working. I think the audio is working. Thank you, Ion, for that. Let's see if I can get these comments up. We are good to go. All systems go. Welcome, everybody, as we wait for, this is the weekend review of Sinclair Range, September 5, 2025, as we wait for people to join. You know by now, if it sounded good from Facebook, thank you, Ashley, for that. You know by now that as we wait for people to join, this is our time to talk about our absolute favorite turnaround leader ever, Mark Carney, Prime Minister of Canada, former central banker turned self-appointed turnaround guy. I don't know if you know this. Maybe you've heard. Canada has a spending problem. U.S. has a spending problem too, but Canada certainly does. In fact, the U.S. is sort of a larger spending problem in many respects. Its debt to GDP ratio is higher, 120.79% in the U.S. versus 110 and change in Canada. Still really high for both countries. The government debt per capita is $104,000 in the U.S., way less in Canada, $60,000 government debt per Canada. But in Canada, we have much higher, a severe household debt problem, where household debt to GDP ratio exceeds 100%. It's around 75% in the U.S. And so that's all due to high mortgage debt. Basically, Canadians have a real estate bubble. Nobody who doesn't have a home can afford a home. People that do have a home, it's worth a lot more than it used to be. And so you go and borrow on that inflated value of the home, and you take that money and you spend it. And you spend it because you don't have a job, wages are low, and inflation. And so the household debt in Canada is tremendous. And of course, if you don't own a home and you're renting, well, you're basically screwed as well. So that's what's going on. And Carney, our famous turnaround leader, again, we're just spending some time here until people join us, was asked about this today, to which he said, and I wrote this down word for word so that we can have an accurate pitch from the leader of Canada. The federal government has been growing spending as a whole over 7% a year on average for over a decade. That's twice the growth of the economy on average, and it's not a sustainable situation, so we need to rein in spending. We need to find efficiencies. We're in the process of finding efficiencies, and one of the big elements of these discussions over the next 2 days will be about these efficiencies. And that won't be the final discussion. We'll continue to work on these efficiencies right up to the budget. That's what he said. So far, so good, right? Welcome those that are joining us here. We're spending some time waiting for people to log in. So far, so good. Are you skeptical? Are you skeptical about these efficiencies are going to deal with this massive debt problem in Canada? What about the negative growth in GDP? We are in a recession in Canada. Things are going backwards. Labor market's going backwards, more and more job losses. But here's the fun part. Like, he's going to bring this home, our communicator in chief, our turnaround guy for the close, right? He's going to bring this home. He goes on to say, so we need to do that. But at the same time, we need to invest as a country. I don't like where this is going. Let's hear the close. And it's finding those efficiencies. It's the responsible thing to do with Canadians' money. And the key to our strategy for investing, whether it's Build Canada homes or these major projects, is that the federal government sometimes working with the provinces, but government is a bit of measures to catalyze investment, to catalyze the enormous private investment. And that's how we get the big multipliers. And that's how we're going to give ourselves more than anyone else can take away. How's that for a closing? Do you feel better? Do you feel confident? What the hell does that mean? These are sentences that don't even make sense. This guy, he's got a lot of Kamala Harris in him, doesn't he? Do you feel like it's the same sort of word salad, nonsense talk? It makes me laugh. You know, bureaucracies and bureaucrats, they have to talk in gibberish. That's kind of part of the gig. Leadership requires clarity, particularly if you're trying to affect change and be a turnaround leader. You have to be focused, and you have to speak clearly. That's a little bit about what we're going to talk about today, but I think that's enough time here. Let's get started. Welcome to a Week in Review at Sinclair Range. My name is Scott Sinclair. I'm founder, president, owner, all of those things of Sinclair Range, but it sure isn't just me. We have a terrific staff. And the mission here on this show is to provide some insight into what's going on at Sinclair Range. This is your window into the real world of deals, decisions, day-to-day business, the adventures of Sinclair Range, and the journey out of the shit pile that we were in due to my illness a couple of years ago. And we're digging our way out of that, and things are going very well. We have our usual segments: lessons learned of the week, interesting file, deal of the week, struggle of the week, Scott's observations of the week. That's me, by the way. So let's get at it. Sinclair Range, we were asked to participate in a capital raising on a deal. We were asked to participate in capital raising on a deal this week, which we would love to do. We love to help businesses, founders in particular. Sorry, just checking my Instagram comments. Founders which is on a different screen. Founders in particular to raise capital. But this particular deal, we had rejected in the past. And we rejected it because it just wasn't packaged in a way that we could understand or present to anybody. And really, we weren't getting a mandate to do the packaging, which is always our preference. We were getting a mandate to take what they've already done together with their advisors and go to market and find them some equity capital. Well, as I always advise clients, and investors need to see a lot of things, but in particular, they need to see from a financial point of view, how do they get into a deal? How do they get out of a deal? And what happens in between? Very easy way for entrepreneurs, business owners to understand things. How do you get into a deal? How do you get out of a deal? What happens in between? So what does that mean? How do you get into a deal? Are you offering debt or equity? If I'm your investor, your target, and you're trying to pitch to me, are you trying to borrow money from me? Are you trying to get me to participate as a shareholder? What is the yield on that money? What is the valuation on the equity? What is the class of shares? If it's debt service, what is the term? And as I said, what is the yield? The equity, what is the payback? When do I exit? How many years? Are you going to sell the business? Are you going to go public? Like, what are your strategies? What will the valuation be? Are there shareholders agreements to protect me as an equity holder, or a debt and a general security agreement to protect me as a lender? Is your business going to grow? How's that going to work? What would the governance be? Am I on the board? What reporting do I get pursuant to my debt agreement? All these sorts of things. How do I get in? How do I get out and make my profit? How much will that be? And how do I get protected in between? And how do you grow your business? You have to address that in your pitch documents. Otherwise, why am I listening to this? Like, you can't just talk about what we say and what the kids say these days is the pain. Here's the pain that we're trying to fix, and here's the technology that we're doing it with. That's really important in your pitch, no doubt about it. But you need to do the numbers. And entrepreneurs, so many these days, I'm finding, Sinclair Range is finding, are just skipping the numbers part of the entire presentation. Why? Why are we skipping the numbers? Do they not think it's important? Do they not know how to do it? Have they just never occurred to them at all? They're not trained that way. They haven't seen coaching or videos on how to do a pitch. How do you get in? How do you get out? What happens in between? And you have to have your materials tight to maintain that momentum throughout the deal. There is if you join the inner circle, which I'm going to talk about in a minute, and so you reach out and you say, hey, we want to join the inner circle, you get an application. But when you do that for absolutely free, you get a video with my top 3 tips. I don't remember what the name was, but how to raise money. How to raise money. The 3 most important critical things. And one of those is momentum. And momentum, because momentum makes deals and it kills deals. Once you get started, you can't just fall asleep in the middle of it or not have your materials ready to go. And it takes you, 3 weeks to prepare a package or some financial information that a prospective investor is looking for. And basically, when you're off to do a deal of any sort, you're probably looking at a teaser letter, a database, an NDA, confidential information memorandum, a CIM, or think of a deck, a model, a financial model with projections, a data room for due diligence, and a deal structure of some sort, often in a subscription agreement or draft term sheet or what have you. Like these are the things that you need to think about in terms of having your materials together. And I won't go into the details on all of those right now because we will not have time for it, but that's what you need to have. And you need to be focused. So many times we see new technology. How many times have you seen a pitch where well, I have anyways, a technology company comes in and like it's world beating, it's new technology, and we're looking for ways to apply it. And by the way, it applies to every single vertical industry on Earth. For example, years ago, like back in the 90s, we had a UAV deal before anybody knew what an unmanned, what is that? Unmanned aerial vehicle? Yeah, a drone, but a UAV. Before anybody really even knew what that was, we were working on this sort of deal. It was brand new technology. And the pitch was you could use these things anywhere. We could sell to oil and gas. We could sell to agriculture. We could sell to mining. We could sell to military, utilities, right? Go up and check the hydro line, electric lines, whatever. With zero focus. As an investor, how do you invest into that? You clearly can't afford, with any amount of money, to, within reason, you can't afford to attack every single vertical market all at once. So what's your strategy? You have to have some focus. And also related to focus, what you can't do is change your deal halfway through it. And we're seeing that a lot these days. You can't change, for example, from a debt deal to an equity deal without first thinking about how does that impact everything that I've done, all my materials, my pitch deck, my models, my targets. It's an entirely different market that would invest in an equity deal than a debt deal. You need to know. That was another one of the points in that free video that you could be getting if you join the inner circle. It says you need to know the universe of capital providers, and they're different. They have different requirements. And so you need to focus. You need to not change. I'm not saying you have to have blinders and you don't adapt to market realities and all that sort of stuff, but you will never, ever close. If you're in the middle of a deal that's going private, you're trying to raise money privately, and then all of a sudden, halfway through that deal, you decide you're going to be a public company, it changes everything. You can't just do that on a whim. And I'm not saying you should turn down, in that example, a public deal. I'm saying that you need to have focus or you're not going to close. And if you're going to change your entire direction, you need to go back and rebuild everything. That's just the way it is. Be prepared and be focused. And you know what would help you with that? Here, let me tell you, I'm going to check my Instagram first. Let me tell you what would happen with that. What you should do is you should go and join the Inner Circle Deals and Capital. What is that? What is that, you ask? Well, this is a free, private, live community where founders, executives, advisors, professionals, like owner managers, everybody gets to get together on Zoom every 2 weeks to pitch a deal, share challenges, do introductions, to build a community. It's not just me. It is a community. We've had 2 meetings. I started this in August. It's gone great. We've had 25, 30 people at each meeting. I do hope that it starts to grow in September, but it's been great. It's been absolutely fantastic. I pitched a deal at the last one because it's my community. So I thought I would start off on this. You should come in, pitch your deals, by the way. I pitched a deal. I got 4 leads out of that. One of them looks like it may actually have some traction. So it's been really, really useful. And I've been honored and enjoyed that. So if you're raising capital, structuring deals, navigating through tough business challenges, this is for you. What are the goals of the Inner Circle? Education, community, deal review, planning, strategic review. Think any business problem you have, and practicing your pitch. Let me tell you a testimonial we got. We got an email from an entrepreneur. Said, "Thank you for the invitation to the Inner Circle meeting. I learned a great deal. It has also provided me insight on the need to dig deeper on development stages and costs and to strengthen my presentation to the circle. I look forward to making a request in the near future to present." It is adding value. I've been very pleased. Next meeting is Tuesday. We are currently Friday. If you're looking, Friday, September 5th, if you're looking at this not live. And so Tuesday, whatever that is, it's 3 p.m. Eastern, 1 p.m. Mountain, my time. And come join us. Now you can't just, you need to register, which is free. Just send in a note. You can find it anywhere you're listening. You just throw it into the comments. We will pick it up. Say, hey, I want to join that inner circle, and we will get some information out to you to do that. I want to talk to you about a deal that we have going on this week at Sinclair Range. You know, it's September, and in September you start marketing. Well, that's what we do anyways. I always say, for a long time I've been saying this, that you can close deals in August, but you can't pitch deals in August. And so we started going to market this week, it being after Labor Day. And so we have a deal in flow meters in Alberta, which services the oil and gas industry predominantly. What is a flow meter? Just if you're not in the business, it probably doesn't matter, but this goes, it's a meter that goes in a pipeline, and as gases or whatever flow through that meter, it registers how much, and that's how they do their invoicing and monitor volumes. There's my layman's description of it for you. And what we've done is what we call a pre-filing sales investment solicitation process, which is entirely a term that I made up and I'm very proud of. Not the sales investment solicitation process, acronym SISP, S-I-S-P, not that part, the pre-filing part. A SISP is normally something you do in court as part of an insolvency filing. You're going to sell off the assets of the business for the benefit of the creditors. What we're trying to do here is do that before we go to court, but to do it in a court-approved way. So if we end up in court on this, we've cut off some time and we've already made some real progress. And so we started on that this week. And for background context on this business, it's in trouble with this bank, and it has a $3 million more or less first secured creditor issue, bank issue. And unfortunately, with a new lender, we could only get $1.5 million for this business for various reasons. I won't go into the details, but the bottom line is this company's short, can't afford to pay its bank about $1.5 million. So we have to go to market. We have to make that up with equity. If you can't do it with debt, you have to do it with equity. And so we're looking to either sell the business or raise $2 million in equity. Why is it a good deal? It's a good deal because this business is only one of basically 2 companies in Canada that is pre-approved. It is on the list with basically every large midstream oil and gas company in the country. It's already an approved vendor, and it's only one of 2. If you wanted to start a business today and get it to be an approved vendor with these large midstream oil and gas companies, it would take you quite some time to go through that process and be approved. Well, this company's already got that. It's only one of 2. Sometimes it's 3, sometimes it's 2. Don't hold me to the 2, but I'm pretty sure it's 2. Not only that, but the industry is exploding in Canada. Think Mark Carney and all of his efficiencies and investments in Canada, whatever the hell that means. One thing it does mean is a big investment in infrastructure, oil and gas, pipelines, moving our commodities around. And so there's a lot of work going on in that area. And this company is strategically positioned to do really to benefit from that. And in its history, it has been a financially troubled business. But since Sinclair Range has been involved, which is almost a year now, we do their virtual fractional accounting, which is a service that we provide. And it's a relatively new business for us, and it's going very, very well. Since we've been involved, this company basically has lost no money. It's on a cash basis, and I know that because we've never, ever once gone over the operating line. Now it doesn't make positive cash. It just doesn't lose cash. And if you're buying a business that has been in financial trouble, the first thing you want to know is, what's the burn rate? How bad is this going to be? And the answer here is, well, we've been a year without losing any money whatsoever. So that's pretty good. Now, this being September, we've gone to market. Remember the materials I said you need to have? The teaser letters done, strategic database is done. We sent out 150 teasers to strategics this week. The NDA is done. We're moving on to financial purchasers. We're combing through our list of 20,000 odd possible financial purchasers, and we think we've narrowed that down to 150 plus or so, which we are getting an email out to probably later this afternoon or tomorrow, and we've already generated some interest. So that's been my fun deal of the week. We've been hard on that, and it seems to be going well. Struggles of the week. I don't really look at. I've been way too busy to focus on the troubles of Sinclair Range this week. Normally, I got trouble on my mind. I got things I need to worry about. I didn't get around to it this week, which is actually a nice position to be in. But there's a lot of struggles, 100%. I just can't think of them off the top of my head because I've been head down focused. Remember, the theme of this particular review this week is focus. And so I've been heads down, working hard, but stay tuned. Stay tuned, because next week, I think we're going to start covering probably some litigations, which will be ramping up here in September, particularly us versus a multi-billion-dollar New York Stock Exchange traded company that is behaving badly. And it's time for me to jump on this more seriously. So I just want to tell you a quick story that years ago, this is my musings, observation of the week segment. Years ago, as a young entrepreneur, let's call it mid-90s, I was maybe 30-ish, somewhere in that range. And I ended up stranded in Las Vegas for 7 days. Now, I had never been to Vegas before, but it immediately seemed clear to me that Vegas is a place that you want to be for 3 days. You do not want to be in Las Vegas for 7 days. I still don't think it's really changed. It's better than it was. Back then, you couldn't eat. I mean, there was a lot of food, but no food that you wanted to consume at all. And so I was stuck there for 7 days, and I was kicking around. I was thinking to myself, my observation was that I was doing really well in life. I was quite proud of myself. I was patting myself on the back, certainly compared to, friends and peers. No one in particular. I'm not pointing anybody out, but you just, at a certain point as a young entrepreneur, if you have any measure of success, you think, oh, wow, my shit doesn't stink. That's what you think about that. And then you learn when you go to a town like Vegas that, well, there's always somebody doing better than you. It doesn't really matter how well you're doing. Someone is doing better than you. I knew at the time that I was there that there were these high roller rooms, and that there's guys, some gals, but this is the 90s, some guys in the back playing $25,000 a hand in blackjack, which to me at the time, I was like, that's just mind blowing. Could not conceive of that. And I knew that that existed. What I didn't know is that the rooms were massive and full of people, full. Every casino, really full of people paying $25,000 a hand back then. I did not know that there were that many people with that much free cash that were hanging out playing that. Remember, I'm a young entrepreneur back then. And then I started getting to know some of the locals because I got nothing else to do in town as I'm stuck in Vegas. And so I hear a story that Larry Flint is in town. Remember, back in the 90s, the hustler guy, and he was at Caesars, and he was down $1 million, which blew me away. And he had a tantrum and got in a fight with not a physical fight, he was in a wheelchair, but got in an argument with one of the valets, checked out, stormed across, and went over to the Flamingo, which was around back then, and spent 2 days there. And he was up $13 million, all blackjack, which was apparently a big deal for the Flamingo back there. Back then, that was a real problem. So $13 million. So again, this makes the $25,000 guys look like schmucks, right? And I'm just like, they're here, and I'm way down here, feeling high and muddy about myself. And then there was a story coming out of the sands of some oil sheik flew in for a weekend. Sorry, little technical problems there. Flew in for the weekend, and this guy had a private room to himself, a table to himself, and he was playing all 7 hands. There's 7 places at a blackjack table. He was playing all 7 hands at $1 million a hand, which is $7 million per deal. Now, in blackjack, if you don't play, you have to think, well, every now and then I may need to split. I may need to double down. I need more cash for that, more than $7 million per deal. And also, I could just lose 10 hands in a row. That's like, you can go on streaks like that easily. So I was calculating back then, how much money, liquid cash, do you need to be able to play $7 million per deal by yourself at a blackjack table? And I came up with, you would need cash or immediate available credit of $100 million just to go play blackjack for the weekend. $100 million. Now, back in the 90s, there were already lots of billionaires. But I don't know how many of those billionaires had cash of $100 million hanging around. There's a difference between having a net worth of $1 billion and having a valuation, and having cash of $100 million. Big, big difference between those things. And so it just taught me a lesson. It taught me to be humble, keep working, shut up. You're not so great. Be humble, keep working. There's always somebody crushing you, and there's somebody else crushing the person that is crushing you forever. That's just the way it is. Now, why do I raise that for today's musings? Well, to that point in the news today, I was up at 6 in the morning, as I always am, on the deck with my coffee, reading the Wall Street Journal. And it says that Tesla's board is proposing a 10-year compensation plan for the CEO Elon Musk. And that compensation package is worth $1 trillion, potentially. There's a lot of success that has to come with that, but a $1 trillion pay package. And to meet that, he has to increase Tesla's market capitalization from 1 trillion, approximately, currently, to 8.5 trillion. He has to deliver 20 million vehicles annually. They're doing less than 2 million right now. 1 million robo-taxis and 1 million Optimus robots, of which they are currently doing roughly zero. Adjusted EBITDA of 50 billion to 400 billion for 4 consecutive quarters, and 10 million active self-driving software subscriptions, of which there are currently zero. He has a lot of work to do. He has a lot of work to do, but he's getting a bunch of stock awards that will be worth $1 trillion as a pay package, which I think just reminds us all, and I don't give financial advice, but I think I was thinking at 6 o'clock in the morning that we can all agree on this one point. Can we all agree on this? Your first trillion is the hardest trillion. Yes, I took you through that whole story just to deliver that. By the way, I do have to say that I listened to a podcast at 8 a.m. my time, which is after that, Scott Adams, and he said the exact same joke. I thought of it. He said it first. So shout out to Scott. That's it for today. What else do we have? Wrap up. Thanks for listening. Thanks for the kind words. Those that are reaching out by email. That's been amazing. Remember, Sinclair Range is here to help you through a transition. It could be high growth, could be financial distress, could be doing deals. Do I have any comments I need to respond to? I do not. Have a terrific weekend, everybody, and we will talk to you next week.